So first of all, thank you very much for everyone to come to our session. Thank you very much to the organisers. And I would like to start with introductions. I will ask our panel to introduce themselves. And then I would also ask everyone to give us maybe one or two lines about why you feel passionate about the subject matter of our discussion today, which is the cross-border B2B payments and e-commerce. So I'll start. So I'm going to lead this panel. My name is Marcia Cilliers, and I am a consultant in payments. I've been in payments for over 25 years. I worked for Visa for a long time, and then I worked for Microsoft, I worked for MasterCard, I worked for various gateways, and finally decided to share the expertise that I've gained in these jobs with the wider population, especially merchants. So my focus a lot is merchants and e-commerce. So for me, the cross-border is a big cornerstone of e-commerce, because the growth in most of the markets is actually international. Domestic markets quickly become saturated, so being able to sell globally to me is a big advantage. Also, being able to sell globally often seems a very natural thing to do for e-commerce. You think, well, I can just open up a shop in France and off I go selling to the French. Well, it's not quite that easy, right? You have to localize, you have to do the right payments and so forth. So whilst the e-commerce seems to be borderless, there are a lot of challenges, and I'm looking forward to the panel addressing that today. So I'll start with Nirav, and if you guys all do your introductions, it'd be great.
Sure. So, can you hear me? Is that all right? Okay, very good. So you heard me maybe speak a little bit earlier, but I'll regurgitate again anyway. So Andaria is a fintech, really focused and regulated out of the UK and Europe, with today, first and foremost, really having a pan-European focus. We're predicated on two, essentially, product lines, if you like, that are very correlated. So one is a focus on business payments accounts, really addressing what is a kind of a non-inclusive market today. So I think that whenever there is an element of complexity within a business, typically there is a struggle to onboard with some of the traditional incumbents. Our aim is to really bridge that gap and really bring that all together. The second iteration, which is essentially taking that subset of Andaria payments accounts, integrating it inside an ecosystem, a mobile app, a web app, whatever it might be, but really fostering an embedded solution, which allows, number one, businesses to focus on what they're very good at, which is their products and services. And our aim is to approach businesses that are in the non-financial space and allow us to seamlessly integrate the payment transaction in the background. This fosters for businesses a whole heap of benefits, from cost reduction, reduced friction, increased revenue streams, and arguably we become a one-stop shop that allows essentially eyes-on platforms to develop within businesses. There's growth opportunities, there's increased innovation. Now, why is B2B global payments within the e-commerce industry very exciting for me? I think in the recent past, we've seen an explosion in the industry. And I think what's very clear and I think abundantly clear is that the traditional incumbents are not in a position to go and service those businesses, especially from a cross-border perspective, really allowing them to hit their growth targets and their growth curves. What we do, and I think that actually stems from mostly down to legacy systems, if I'm perfectly honest, and I think those legacy systems inherently don't allow for agility. So agility is key. As a fintech, we can deliver on that agility, and we do that simply by, number one, not creating legacy internally, and I think it's kind of through developing a payment orchestration platform that allows us to plug into various providers within our ecosystem and deliver that downstream impact to those e-commerce businesses. And that we can, again, addressing your point, Masha, is kind of that addressing of, say, a French client and being able to plug into the French market, for example, or a Brazilian client, but through leveraging technology such as blockchain or utilizing licenses in multiple jurisdictions, you can bring together an ecosystem that really services the industry well. Thanks.
Great, thank you. Can you hear me? Yeah, cool. Hello, everyone. My name is Vladimir. I'm with NX. We are software engineering and digital consultancy company, and we serve many business domains, but the fintech and payments are one of our key domains that we operate in. I think that nearly 1/3 of our client portfolio are banks, fintechs, payments, and lending companies. Why I'm excited about the payments is because I think that it is one of the important factors for the global e-commerce sustainable growth and financial service inclusion. So we're really happy to be here at the forefront of innovation of the payments. Yeah, that is basically in a nutshell about who we are and what we do. And hopefully I will unbox it later on.
Thank you. Alex?
Hello, everybody. My name is Alex Tonello. I am a CRO at Fido. So I'm responsible for global revenue, so no pressures at all for me. And we are a cloud-based technology that analyzes hundreds of digital signals that comes from email, phone number, device, IP, and browser. And we use machine learning to create risk scores to detect and prevent fraud, in a nutshell. I think this topic for us, for me, is very interesting and very sort of, in a way, creating us to, allowing us to go into an area where we help both sides, merchants to, payments providers and to merchants assess and risk when they have to acquire sort of e-commerce merchants from a perspective of B2B, but also consumers, understanding how to prevent, detect fraud at the point of an interaction when a consumer is making a payment without adding any friction to the journey, of course, because if you add frictions, of course, you lose the consumers at the point of making their purchase. So for us, we see both sides, and that's why for us this topic is really, really exciting.
Thank you. Paul?
My name is Paul Farquharson. I manage payments at Unlimit. We're a kind of global financial technology company specialized in kind of card acquiring, local payment methods, banking as a service, financial services, as well as kind of crypto platforms. So we kind of cover main regions are kind of LATAM, as well as Sub-Saharan Africa, Southeast Asia, as well as kind of UK and Europe are kind of main markets. So traditionally, we've been focused on kind of solving and growing kind of cross-border for our merchants who range from payment service providers through to ISVs or SaaS platforms, through to kind of merchants, et cetera. So we've got a very wide portfolio of customers. I guess what it kind of super excites me about this is the kind of people side of cross-border. When I'm talking to kind of customers, consumers, buyers, merchants in, say, Brazil, Mexico, or Colombia, which are our core regions covering 70% of the e-commerce market in those regions, they traditionally say to me, for me to be able to buy products from the US or from the UK or Europe, I had to get on a plane, I had to go over there and buy it, bring it back, pay duty, and then come back in. Whereas that kind of fundamentally has changed, and I love being part of, I guess, the kind of technology bridge that Unlimit provides, which allows our customers to be able to access emerging markets and to do it in a kind of safe, secure way, taking our best practice, our kind of playbooks and our ethos around technology first with people and local expertise, and kind of provide that kind of guidance around how to optimize kind of cross-border payments and effectively growing in international markets.
Well, thank you very much. So to get us started, just a couple of points. I remember it was about 10 years ago, I was doing some research on cross-border and global payments, and there was a study by PayPal that was called The Silk Routes of Payments. I don't know if you guys remember, there was a really good infographic about it that talks about who buys what from where. And of course, there's some expected ones that we're buying a lot of consumer goods from China, but then China is buying a lot of luxury goods from Europe and so forth. But at the time, it was quite revolutionary. However, the world's moved on in the last 10 years. I just looked up some statistics, the freshest statistics as of yesterday. And if we look at the overall global commerce, the B2C sector currently represents around 750 to 850, depending on what research you look at, billion dollars. And that is expected to grow to over $3 trillion in about 4 years' time, so by 2029, 5 years' time. Whilst the B2B currently represents around 6.5, 7 trillion, and is expected to go up to 25. So this is one of the reasons, when you see the subject matter of our panel today is talking about B2B. I think most of the retailers, most of the payment companies got to the B2C commerce, right? We understand, again, that in the e-commerce B2C, about half of the retailer volumes generally will go online. If you look at it globally, obviously that varies country to country. The B2B sector, a fraction of it is going through the e-commerce. So that's the one statistic I want to leave you with. Another side is the cross-border. I said before, cross-border is definitely the big growth, and the big growth for both B2B and B2C. And I was astounded to look, and again, depends what statistics you look at, but expectations by the likes of Juniper and so forth is that in as soon as next year, cross-border in the B2B is about 40 trillion, right? That is a huge amount. If part of that goes through e-commerce, if part of, there is enough of that pie for all of us to target. But I think what, I guess, going to the panel, the questions are, the B2B environment, or B2B2C, they don't pay with cards, they don't pay with traditional payment methods. So Nirav, what kind of challenges do you see in being able to facilitate this B2B flows with what we have in place?
So I think I really see it stemming from predominantly interoperability, if that makes sense. And I guess the point I'm trying to get to is today is, if you look at fintechs and, for example, our scenario, we are regulated in the UK, therefore connected to faster payments, regulated in Europe, therefore connected to SEPA Instant, and those local clearing rails that allow for real-time payments and essentially what the businesses or the e-commerce businesses are really looking for. Where I think the challenges then lie from a personal standpoint, if you like, and even wider within the industry, is how do we go and facilitate those payments outside of our regions of focus? Paul touched on the fact that they are focused in LATAM. Let's take that as an example. If we have now the ability, not necessarily to go and foster a license in the respective jurisdiction, I mean, there may be budgetary requirements, timelines, etc., but maybe look at partnership as a route to go and plug into those local rails. That now gives us a global offering. And LATAM's one example. You could arguably now do this jurisdiction to jurisdiction, and rather than relying on the traditional rails that were, and again, maybe the second time I've mentioned SWIFT today, SWIFT was the go-to originally, and that was the framework that's kind of always been utilized, but it doesn't mean that is kind of always going to be the way going forward. And I think it's on us and industries like ours to really challenge the status quo. And I feel like this interoperability model really is that next iteration. I think it comes down to, again, a theme that I touched on earlier, which is trust, working with trustworthy partners. So from my perspective, understanding that the partner that I'm working with, LATAM or China or wherever it may be, has the governance backbone and structure and the right security measures in place. That naturally comes over time and through assessments. However, the level up or the platform that's already there is the kind of lower hanging fruit to really get to market. In an ideal world with an unlimited budget, we would go and set up in every corner of the world and set up every ACH there is to have, but it's not really possible. And I think that interoperability is really the key.
Okay, well, thank you. So you've mentioned Paul, so I guess, Paul, my next question to you in terms of that internalization, interoperability. Tell us, how do you succeed in going, because you work in some very difficult markets. Can you give us a few words about that?
Yeah, we wouldn't call them difficult. I think that's the kind of perception that if you're not selling and trading in the UK or in Europe, it's a difficult market. It's beyond that, actually. The innovation and the excitement coming out of the emerging markets is palpable. It's almost kind of a festival of innovation that these markets have been running almost kind of day to day with the challenges that we're seeing in the UK and Europe and in America. It's just kind of BAU that you have crazy inflation. Like Argentina's 100% inflation year on year. It's just kind of unbelievable. But for them, it's day to day. So consumers and merchants and shoppers all understand that they're able to operate in these kind of markets. What we do is we localize our expertise. So we have making sure that we've got teams to be able to be based in our kind of core markets, so kind of Sao Paulo or Mexico City. Or Bogota, etc. And so we have the local expertise on the ground. We also have the infrastructure that we're one of the first fintechs to be able to gain direct acquiring licenses in market, which really helps because it's usually dominated by banks, traditional banks, which come with their own challenges and they're not able to be moving. And to your point around agility, that is a fundamental kind of consideration when they want to be able to enter into market. You need agility. But then you also need the localization, which I think that one of the last panel touches on. And for us, we like to be able to, of course, make sure that the payment mix is inclusive. And that inclusive message is very key because when you look at some of these markets, just cards are just not anywhere near the penetration that they are on a kind of home markets, etc. So therefore, you can't think in a kind of scheme way. You must think in what's the most inclusive payment mix. And again, it's right having the right mix based upon the customer that you want to be able to target. But for us, we also look at native language, native speakers, and the way you articulate your product to your local consumers. People just think, yeah, we'll get a translation service, bang, and it just kind of goes, I don't know, 80-20 rule of it looks good, but actually you need native speakers to build up that kind of articulation of your product set, and we help through partnerships to be able to leverage that and make sure that's kind of clear. And I think some of the key mistakes we see from people not really understanding or be successful in local international markets is not understanding key trading days. Like we all know that kind of Mother's Day, Christmas are kind of big UK trading days. But when you go across to Brazil, etc., you've got Brazil Week, you've got Consumer Day, you've got Children's Day, you've got, as well as the other festive periods. If you don't bring and have that understanding, you need to be able to sell your products with the right loyalty into those, you're going to really struggle to take off. And then, of course, there's the logistics side. Not everybody has a kind of beautiful postcode like we do, so there's a different kind of delivery and last mile consideration. And then you've got currency exchange issues that you also need to make sure you work with a provider to understand how that manages your margins and the settlement process overall. But again, to the point of partnerships and expertise, you want to try and pick that with people who've got that credibility locally, local teams, but to provide that type of infrastructure either through a single API or have a single API that have a multitude of value services that allow you to switch it on and switch it off. And I think that's the last point I'll touch on. You need agility, you need the ability to try. And within times that we've got today, which is low growth, smaller basket sizes, we've got cost of running a business is much higher than it was 2 years ago. We either just kind of go race to the bottom or we go about growth and expansion. And I'm definitely more of the positive side of let's expand, let's grow, because it's a small world out there and there's a huge opportunity. And when you look at Brazil, you've got 58% of the population who buy cross-border. You go to Mexico at 65%, you go to Africa at 68%. These markets want to buy and they want to be able to take advantage of cross-border transactions.
Well, as you're saying, that no retailer or merchant has capacity to go and set themselves up in every country, to your point, get themselves that localization. I think an interesting point as well, you picked up this localization. So in my Microsoft days, I remember we kind of assumed we were launching Xbox in a bunch of countries and we just translated the site. And then we had complaints because, I don't know, in Spain you put the euro sign at the back, you put VAT in a different place. So you actually need, and there's a big difference between translating and really properly localizing, so using local people, understanding that, and then understanding the customs. And because if the customer sees a checkout page that's unusual, they might not bother checking out. So that's on that kind of the packaging side of things. But what happens in the underbelly, in the technologies, I guess, Vladimir, a question for you. You guys help to put all these pieces together. So what are the challenges that you most frequently come across in terms of making cross-border work for merchants, manufacturers, or retailers?
Yeah, sure. It's a great question. For sure, cross-border are more complex, involve more risks than domestic payments, and it's more heavier regulated. But I think that the main challenges and pain points are the same. Those are, for example, high transaction fees or cost of the transaction, speed of the transaction, lack of the transparency across all the stages of the flow of the process, and some issues with the security. But I would say that there is one issue to rule them all, which is called outdated technology stack or legacy infrastructure. And I would agree with Nirav that agility as well is a key. So I think that a lot of cross-border payments, B2B companies suffer with these issues with the technology itself. That's what we do. So basically we help and we can support at any stages of the journey of the payment company, from entire forming the vision of your, I would say, next iteration of your product. We can support with our solution architects, product management team, and we can later support with implementation with our engineering arm. So yeah, I think in a nutshell, a a lot of the issues and frictions with the cross-border could be fixed or resolved with a proper technology stack and adoption on the new development techniques and partnering with the new fintechs who deliver those solutions.
Okay. So we talked about, I guess, the challenges in terms of accepting the payments, but the numbers I've mentioned before, we're talking about trillions, obviously. The good people are excited about opportunity, the bad people are excited about opportunity, so there's fraud. And I guess, Alex, if you can talk us through a little bit about the types of fraud you may be seeing in the more B2B type of payments and the B2B type of environments, that'd be great.
Yeah, so just sort of connecting back to some of the things that Paul said about innovation and agility, we have to remember that while the industry innovates, the fraudsters do at a much faster rate, unfortunately. And so really is a question of keeping up, really, and trying to understand what are the things that are going on. So we see in our technology is very, very broad, so we see many types, but from one of the things that sort of look at recently and increasingly is something that not just us, but government is looking at very closely, for example, things like authorized push payments, where the example is fraudsters will convince the payee to send payments, and of course the fraudsters behind all of that. So and this is something that goes through the banking system, right? So the banking system has to now to have this new issue to say, actually, how are you going to deal with it? So the UK government already sort of went out with a model which is around effectively giving back the money to people that have been victims of frauds, and the US now is following suit. So we are seeing an increased issue. I mean, this type of fraud alone is worth in the tens of billions, right, in the US alone. And a lot of it is under the cover because not everything comes out. There's things about embarrassment and things like that. But what we see is a growth in that, and governments and companies have to adapt. And going back to the point about what can people do, what companies can do, is around technology, using alternative data, using machine learning, because obviously fraudsters will use the likes of ChatGPT to automate some modeling and some coding, and companies have to do that and more. So I think it's about partnering, and it's about leveraging the right type of tech and data, alternative data. Traditional data points are good, and companies would use a variety of that, but it's about going out and find more sources because you have more data, you're able to crunch more, analyze more, and create a better risk decisioning for the businesses. So that's an advice from our side, from what we're seeing.
Okay. I know, Alex, you've mentioned when we were chatting about it before, the kind of the friction and how to avoid friction with better technologies. Is that something you want to talk about?
You mean like unbox it a bit?
Yes, I mean in terms of that, I guess the UX to the customer, be that a business customer or...
Yeah, sure. I will be happy to walk you through one of our case studies with a logo that I can publicly disclose. So we work with a company called Currency Cloud. They've been acquired by the Visa, so they are now Visa solution and part of the Visa family. They are B2B cross-border payments as a service company, and they based in London in the UK, but regulated in Europe, in the US, in Canada. And they requested, like, there were several streams where Enix helped with the enhancement of their product. So basically, they requested to develop user-friendly and adaptive web interface, like a web app, to access all of their things under the hood. As well, they requested to support to migrate to cloud from on-premise to the AWS cloud. And we also were involved in the architecture design. So basically, letting them to like scale up easily with microservices, because before they were like heavily on the monolithic architecture, and it is really like hard and costly to scale such systems. And the migration to the microservices allowed them to adopt new functionality and add more like streams on the go. So we've been partnering with them for years already, and we developed like many exciting things, which led to huge, like massive increase in the transaction value that they're able to process. If I'm not mistaken, it's now up to like $500 million in transactions per month. And it was the result of all of those different phases of the implementation. So for example, how they treat and process the data, like how they work with how the bits and pieces work inside the architecture, cloud adoption, all of those factors leads to the better basically processing. And as well as when you're developing more tailored UI UX solution, it also boosts the partners and clients' loyalty. And the last but not least stream that we helped them with, that we integrated more than 10 third-party like partners for the currency cloud, which allowed them to work with more banks, adopt more currencies, and unlock more geographies. So like, as I mentioned before, it could like we serve as an end-to-end consultant, and any stage of your transformation journey, we will be happy to jump in and to think together with you how we can, how your next iteration of your product might look like. Or for example, if you were thinking of adopting like blockchain technology or DLT in your payments module, we can help you with a POC or MVP utilizing our SMEs and the tech stack.
Sorry.
And yeah, actually,
A question from my point of view.
Yep.
Seeing as what you've done with Currency Cloud, and this may be a panel unto itself,
Yeah.
do you feel like banks ever have that ability to mold or reshape based on the legacy discussions that we've had? Because there's this continual argument that banks are here to stay, which again, I believe, but do they ever become agile enough?
Absolutely. I mean, we see that agility is a buzzword of the industry, right?
Yeah.
And the old-fashioned banks, they suffer from the new market entrants, from the new players, and I'm sure that there won't be any other option. They will be all transforming and changing to be like more of a fintech, right?
Yeah.
Or they will just disappear because of the competition in the market and new players.
I guess the question is who wants to go down that rabbit hole? But
Yeah, absolutely. I mean, and we are happy to help the banks as well. So.
sure.
So, well, by the way, we will be taking questions from the audience. So if you do think of something, there's an app, I believe, or please keep a question. I'll ask a couple of quick questions, and then I'll be expecting some interesting questions from the audience, please, as well. So, Nirav, just on that, I think on Alex's point, and you've mentioned the word orchestration, and Laura, you were talking about orchestration. Everybody talks about orchestration. It means different things to everybody as well. But in terms of the kind of the B2B aspect of it, it's even more complicated. As you said, you have to work with a lot of different banks. There's a lot of different organizations. How do you see, some of what we know in the B2C world as in orchestration can be adopted for the B2B use cases? Are there any examples?
So from my perspective, I think it comes down to a term which is essentially the one-stop shop. And what do I mean by that? So internally, we have a payment orchestration platform, and I'll use maybe an example of plugging into a KYC or a KYB provider or a transaction monitoring system, and then the payment rails. Now, how that is packaged and offered on to our downstream clients is essentially that, a one-stop shop. So it now becomes arguably modular in that you can go and pick off the shelf. I'll have KYC or KYB, transaction monitoring. From our perspective, and this maybe starts encroaching into the embedded payment space, and I know we'll save that for a little bit later, but I truly believe that within an orchestration platform, it goes back to the buzzword of agility. Yeah. If you are agile, you are able to, number one, address the problem at hand coming through to you from a prospective client, and I think that's key. And whereas before it was the business would come to you and the offering would be, here's the box, off you go, and that's it. And there wasn't really any agility or any kind of, I guess, molding it into what the underlying client requires. I think that's the new frontier. So for me, payment orchestration is key. And yes, it can absolutely be packaged for businesses. But I think the key is it's got to be valuable. There's no use in you plugging into something that's going to never have any downstream impact. And so what are the deliverables around that? I think it ultimately comes down to either reducing or managing the bottom line of businesses, so being a cost saver, or being an added revenue stream, which are the key metrics really that in the world of today, I mean, gone are the days where it was all about growth and number of users. I mean, I think that is arguably well and truly dead. And now with where the investment markets are, we're back to the old world of revenue matters, cost saving matters. I think if your payment orchestration platforms can address those for businesses, that can absolutely be packaged.
Well, then there's a big part of, again, in my experience of using orchestrators, there's one thing having orchestration as an access to lots of payments. There's another being able to get the reconciliation of all these lots of payments in the back office. And maybe Paul, so you work a lot with different payment methods, and how do you make that orchestration work? I think from the back office side of things, and then maybe leading on to, I know you wanted to mention the embedded payments and then how you're supporting those.
Yeah, I think our kind of recipe is we go direct to source for all our local payment methods kind of globally. And I think that gives us the ability to make sure that when we build it working backwards from the customer and what their needs are from whoever they are in whatever region that they are based in. And then we work backwards from that and make sure that it's embedded within our business and it works all the way through downstream to make sure the reporting and reconciliation. And so we embed that in every single local payment method we do. And again, taking us back to kind of LATAM, that's critical when it comes to be able to get the right kind of payment mix and to be able to surface it at the right time. And I think the last panel talked about when do you surface or how will the kind of checkout look in 5 or 10 years. It will come down to the optimization and personalization of data of that consumer. However the medium is to be able to do it. We want to play at the infrastructure level to make sure that that partner, that merchant has the ability to render it when it is the right time in that purchase and checkout flow. So we kind of see that as a kind of key ingredient. And orchestration, again, means different to different regions in the world. And so again, where you don't have a kind of mature infrastructure, orchestration can actually play a valuable way to be able to have more inclusivity of new innovation, new brands and new technology, because they've not had that ability to be able to innovate because the government hasn't created the right regulation framework, etc. But again, we like to be able to kind of help solve that problem by almost kind of be that kind of one-stop shop that you talked about, regardless of where the merchant is based, to allow them to be able to surface what's right for them. But for us, moving on to the kind of embedded payment side, for us, that is the future where we want to be able to kind of play. We see the biggest need from our customers to be able to say they're providing a value-added service in a kind of SaaS environment, and they don't want to then have to kind of go out and say, well, you need to connect to a payment solution provider or a KYC provider. They want it embedded, they want to white label it, and they want to be able to make sure that they don't do any pass over to their customers, and it kind of flows really nicely through. And again, you need to have the architecture, the people, and the technology to be able to make that seamless. And again, that's something that we kind of lead with first, is looking how we can develop payment facilitation models. We look at aggregation as a great tool to be able to kind of surface this from a payments perspective. And again, we kind of bring in the kind of key markets, which for us, LATAM, Colombia, Mexico, Nigeria, Kenya, Southeast Asia, and of course, UK and Europe. And so once you start bridging, and I think that's the term I love with embedded payments, if you can be that bridge or gateway, it allows you to be able to add much more value. And I think that's the kind of premise of why it kind of is really exciting, of how you can build those bridges and be that technical link.
So that staying with the one-stop shop, I guess, that sounds exciting, but without dampening that, obviously, the one-stop shops do also take, depending on the setup, will take a certain financial responsibility and risk for these merchants that they provide multitudes of services for. How do they onboard those merchants? Because I think, again, if we look in the traditional card world, the schemes have evolved over many years, decades, where there's a lot of rules and there's certain things you have to do onboarding a merchant, there's certain processes you have to follow, there's networks and databases and so forth. When we go into the other world, instant bank payments and so forth, how do you ascertain that those merchants are not fraudulent, Alex?
Yeah, so, well, first of all, orchestration, we, for example, we don't want to be a one-stop shop because we would like to be interoperable and sort of interlink with other solutions that are out there. So we are not a just KYC provider. So we like to enhance and complement. That's one of the things, one probably quick clarification about when you talk about orchestration, it sounds like you got to buy big things, and some clients get scared. But if you think about a bank, you were talking about earlier, but their agility, right? They get like a bit like, go through their procurement department and you'll see what orchestration means for them. But I guess to answer your question specifically, merchants onboarding is really big, specifically going to, our technology is fully global, and you go into big sort of developing countries like we are in India, in Brazil, where you have like smaller merchants, like microfinance, smaller merchants, and you have to onboard like in the hundreds of thousands. So we're not talking about tier 1 retailers, we're talking about hundreds of thousands of one-man shop. How do you do that? And really for us is about looking at those pre-screen level of an application that would be like simply a name, an email, and a phone number. And with that, you already have a wealth of kind of data points, 300 plus data points you can pre-assess in seconds and say, actually, I can see this is a proper, genuine person behind that merchant, or you can see this guy is just there to pretend to be a merchant.
Funneling them down,
Absolutely.
Filtering them out earlier on. Do we have any questions in the audience? And Georgina, I know you've got the app there. You were going to read anything for us, if there's anything there yet? Anyone?
I had a question maybe
for it.
for Alex. So, Alex, from I guess some of the points you touched on, and an interesting area internally for us is maybe the ability to price for risk. So I know you touched on there could be hundreds of thousands of one-man bands, but arguably if you're able to subset those into specific industries, there's an inherent risk that's there. I think what's very fascinating is, or the next evolution potentially, is to be able to price for risk. Is that something that you guys have looked at or thought about?
Yeah, I think it's an interesting concept, but we probably could be very agile, go back to agility and move towards that. But I don't think the market is just there yet. You still look at it from a individual application, because unfortunately fraudsters are really innovative, right? So even if you were trying to do it on a per sector level, they will try to say, actually, okay, let's go into the sectors where it's potentially lower, find a way around it. So it is very much still on application base, but you can scale it up. That's the point, right? You don't have to be weighted down by, you got big volumes, how do you do it? You can scale it up quite easily by leveraging those data points.
Questions?
Yes, actually. Yeah, thank you. There is actually a question within the app. There is a lot of agility buzzword being used by panels. How do you convince the partner or businesses who doesn't necessarily believe in an agile manner of delivery in your journey of integrating a new solution with them?
I'm happy to take that one. So I think really, number one, it's understanding the client's problem or the solution they're looking for at hand. I think that's first and foremost. I think the second element of that is it's not that they have to accept our agility, that it's there and it's available. So from a business perspective, my or Andari's point of view is to address or find the solution to the problem that makes sense for the underlying business. The agility is something that we bring as part of the package. What we're really trying to get to is allow the business at hand to really focus on what they're very good at, which is their core product or service, which is typically non-financial. And I think that is essentially their aim. And for us, it's to just seamlessly, and if they want, in the background, just integrate that payment service. And I think that, for me, is the way to approach it. We're not trying to shove agility down anyone's throat, but it's there and it's available. And as you scale, we want to be there to scale with you.
It's almost like configuration, right? So as you're saying, so if we, I work a lot in the B2B marketplaces, they'd be crazy to accept credit cards for selling an engine for a boat that costs 3 million, because the chargeback on that, not to Mintos probably won't get authorised, and there's not such card limits. But as you say, having that available, because there might be a service for B2Bs which does go for cards, for example, so at some point they might offer that payment method. So I think it's what you have in the box, and what you enable, then you decide to make a hard box on top of that agility. I think that's probably the answer.
I would agree, and I would love to comment as well. So I think that the agility is not just a buzzword itself. It could be we often use it, but I mean, it could be a measurable effect of adopting agile methodologies, because it basically boosts your go-to-market. Because if you're talking about software engineering and consultancy, like how things works in all of those platforms under the hood. So it will help you to do deployment more frequently and seamlessly. And basically, you can measure the outcome and how it will contribute to the faster go-to-market cycle. So.
I think from my experience in working with, especially retailers, like larger brands and retailers, they generally don't have agility internally, because what generally will happen with all of their products and kind of payment-related services, they were fixes. Somebody needed something, they put it in, and they somehow tied it together to something else. Airlines, we talk a lot about airlines with some of my colleagues, and in these cases, it's surprising some of it holds together, because there's so many bits and pieces that were randomly connected to each other, because they never have that strategy, they never have resources, time, money to go and do the overhaul. So having the partners whose, I guess, bread and butter it is to do the agile systems that can serve any potential need, not just from an airline, but from a manufacturer and a retailer and a B2B and a B2C, then there's a strong point in there. Any more questions? I think we have about half a minute remaining. I don't know if you wanted to mention the embedded payments. Yeah. Do you want to just throw that in as a closing note?
Sure, absolutely. From my point of view, I think it's very much where the industry is going. So what is embedded payment? And I think I touched on it. It's, again, allowing businesses within any sector, so arguably sector agnostic, to really just focus on what they're very good at. Now, why would they, or I think the argument is, of course we know why they'd want to do it, but why would they want to then integrate an embedded payment service? I think it adds revenue streams, as I touched on, so the ability to now mark up on what traditionally would have been a cost to the business, you can now mark that up.
Sorry, so when you do it, so that's technology companies, that's...
It could be, so us as the fintech with the EMI license, now integrating our payment services, that can now be offered downstream, so a B2B2C or a B2B2B scenario under embedded allows now the middle B, if you like, the business in the middle that's got the clients and the consumers, to generate revenues that were a cost once upon a time. That would have been paid away to the banks. And it's the ability to now create a revenue stream without the cost of infrastructure. So businesses don't want the cost of maintaining, or number one, getting a financial license set up and then maintaining it. I think there's plenty of us in the room that can attest to the costs, the trials and tribulations around getting something like that set up. Again, just goes back to my core point. Let's focus on what we are very good at, allow businesses to focus on what they are very good at, bring those two together, and I think you've got there a match made in heaven.
So there we go. So I guess in summary, B2B cross-border payments, you need agility, orchestration, international presence, and ability to manage different types of fraud. So guys, thank you very much. We've been asked to keep it short, so we will be here throughout the day.
Yes.
If you want any more statistics and stuff, reach out to me on LinkedIn or reach out to the guys on LinkedIn. So it's been a pleasure talking to you, and I think over to Georgina for the next session. Thank you very much.
Thank you.